Hey, everybody. Welcome back to another episode of the Creative Finance Playbook Podcast. I'm your host, Jen.
I'm Joe.
And today we have such a special guest with us today. Caleb is here to talk all things ethical and responsible and how to do business right when you are taking over people's mortgages. Caleb, thank you for being here.
Thank you. It's an honor.
We are so excited.
I was super excited to have you on because, I think with creative finance, there's right ways to do it. And then there's so many wrong ways where we could really mess this up.
Well, it's scary, right? Like how many people are like, oh, I got to make someone's mortgage payment. Like, can I even do that? Is that legal, right? Like, let's unpack all of the things. But first, let's hear about who you are and where you're out of and what's going on.
Well, thank you. I live in Kansas City. I work in a basement, a nice little office with a lot of lighting and a nice camera. And that's about my whole job is just learning stuff and talking to people. And so that's what I enjoy doing is teaching and training people. And I tend to study things so deeply that it's relatively easy for me to be like the moral compass when it comes to complex issues. And so that's really where I've taken my specialty and my niche is I started a company called Creative TC. That's for transaction consulting and specifically around creative finance transactions. Sub-2, seller finance, contract for deed, land contract, trust acquisition, private money lending, all that stuff. There's a lot of complexities, the craziest of which we can get to later about trust because you can just do stuff in trust and it's not very regulated. But it's like, what's the totality of circumstances here? Yes, technically you can do A, B, and C, but should you? And what are the long-term implications? And so that's where I built my foundation. That company's 3.5 years old. I just got my agency license in Colorado to start a title company. And so I'm expecting to start opening files in October 2025. And so that's my next stage.
Bam, there you go. How did you even get into real estate in the beginning?
You ever heard of an accidental landlord?
I married one.
I became one because of you.
There you go. I couldn't sell my first house, and so I had to rent it out. And then I read Rich Dad, Poor Dad, and I was like, thank God I did not sell that house. And that was the beginning of it. And I went and learned on Bigger Pockets, and then I went and found other stuff and followed entire YouTube University courses, basically, to figure it all out.
So when was this?
2019.
Okay, so you've been doing it for a while.
You could say that. Doesn't feel like a while.
Time flies when you're having fun here.
Yeah, of course.
Yeah.
So you rent out your property, you're getting into real estate. What got you more into the creative side of real estate? Because there's so many things, right?
Yeah. Just looking back through my life in rear view, it's like, oh, I was always an outside the box thinker, doer. Like there is no box to me. So somebody says you can't do that. I'm like, yeah, but if we could, how would we? Right. So that's always been true for me. And when I found a bunch of creative finance resources online, I just dove deep because that was fascinating to me. The other way is slow and normal, and there's nothing wrong with that. But I like weird stuff. And creative finance is weird, and you can't tell me otherwise. Like it shouldn't be somebody's primary, like a seller doesn't go creative first, and they shouldn't. Creative solves a problem.
Yeah. And, and that's what I think of too, is we're helping solve people's real estate problems. And there's a lot of reasons why somebody would sell with creative finance, and it makes sense for the people that it works for. There's a lot of folks who, we'll have the conversation and I'm like, your best bet, considering your situation, is go listing it with an agent. And many times that is the best bet for some folks. And, sometimes they come back to us and say, I did that and that's not working. And now we're having that conversation again because now they have a real estate problem. Right.
So, and I've trained lots of people on cash realtor and keeping it. That's just the easiest way to say it. But it's like, listen, a cash deal is always the fastest, easiest, simplest. Do that. If it's an option and you can make money, done. Don't complicate things. Next would be listing on the MLS. And I'm not an agent. I don't intend to be, but I know agents and I should be able to refer people. And then keeping it. Why is the seller not keeping it? Why don't you just cash flow it? But long story short, the seller needs to tell me why the cash offer doesn't work. I don't care if I already know. I need them to tell me, right? So it's disqualification. I really like a hard disqualify on the front end so that by the time we're done disqualifying, I am your only option. And I'm your legitimate option.
Yeah. We've ran into that a lot too, and there's some folks for some odd reason, they don't want to go with those options. And I don't get it, right? We've bought so many turnkey, beautiful houses where they're like, no, I don't want to list it with an agent. And most of the time it's because of speed and convenience.
Yeah.
And we could pay full price if we're able to get great terms. So it's not like I have to give them a lowball offer. That's why I love creative finance. But, it's weird. We bought some really nice houses and I'm scratching my head. I'm like, how come you don't want to list it? And they're like, I just don't want to. And I'm like, okay, I don't need to dive through all the layers.
Don't like walkthroughs, don't like agents, don't like all the stuff. They've been through it before. Yeah, I get it.
Well, and
Yeah.
people are wild too. They'll just pack up and leave,
Yeah.
and they're not even there to help
It's
with
like it's already
showings.
vacant. Yeah.
Yeah, they're like, "I already moved to Florida, so yeah, you can buy it and just start making payments."
Yeah, we bought a house or property in New York, and they were like, "We're packing up and moving to Florida."
They asked us if we knew of any jobs in the area. We're like, "I don't know exactly where you're moving to, but we can help you with the house."
Yeah. And they had no exit strategy in place for the house they had. They were just like, we're just out. And I'm like surprised. And I explained to them how we're going to do it. They were thrilled. We were thrilled. We did the deal, asking Jen if they knew how to get a job in Florida.
Yeah, and it's so easy to talk about these once you've done a handfuls of them, right? Like, but I remember my very, very first time ever taking over a seller's mortgage, and those are like for our listeners, I want to go back to that because you have built this entire ecosystem to truly help people kind of get over some of these fears, the big boogeyman, right? The due on sale clause, and all of these things out there that stop so many people from even learning how to do creative. So we've already said if you want to do creative, it gotta be a little weird, right? Like all of us here, like we want different. We want other options. If you tell us no, we're gonna be like, yeah, but how else can we try to make this happen? And so if you're one of those people listening, let's get into that for that. I mean, what are some of these major red flags of like, oh, I'm too nervous? Like, let's kind of dispel some of these fears that people are having.
Sure. I mean, one of those red flags would be for me if a seller expresses that they don't actually understand. Like if they're just saying yes because you're solving the problem of getting the house off, like getting their monthly payments taken care of, like you're relieving the pain, that's fine. But if they really don't understand that their credit is still tied to the transaction, like, hey, your account, like, I'll be responsible for making the payment, but you're still legally accountable. Let's talk through that. And so I became the person that wasn't there for me, right? I did my first couple of creative deals. I jumped on a wholesaler's team as an underwriter closer for creative deals and cool, got a couple under contract, didn't have to lie to anybody, et cetera, figured out how to do that honestly. And then the wholesaler wants to assign it to people. And I'm like, I've never met that person. Are they credible? Like, what's their credit score? Are they really going to follow through? And so nobody was there to answer those questions. Nobody else cared. And I'm like, people are just out here doing stuff with no guidance and the title company's not helping. Like, who's here to help make sure this goes right? I don't want to attach my name to that.
Well, and that's the point. I see so many folks who've seen a few YouTube videos. They're like, hey, I want to do a deal, but they're not formally trained on how to do this properly. And so this is the challenge where, if you're buying a house, you should still be educated on how to do that. But if you're adding this layer of complexity to
Yeah.
it, you certainly need to know how to cross every T and dot the I the right way. So that's why guys like you and your business exists to make sure it's doing it right. Because the worst thing in the world and the last thing you want, I'm going to make sure I'm crystal clear for all my watchers and listeners. You never, ever, ever want to have a deal where the seller's like, you never told me that. I didn't know that the loan was going to stay in my name. Right? Because you're just asking for a disaster. And I promise you, it's going to end bad for you. It's not going to be great. But you can do this ethically, legally, with full transparency. Because if you're working with a truly motivated seller and you've eliminated some of the other things they could do and they don't want to, it's just having that conversation. And so sometimes I sound like a broken record. I'm like, okay, I just want to make sure once again, you understand I'm buying the house, but the loan is going to stay in your name and we're going to make those payments on your behalf directly to your lender every month. And we're going to do that until I don't know when we're going to get it cashed out. Sometimes I sell it. Sometimes I might refinance it, which I won't. I'm going to, especially if they got a really low rate.
Yeah.
There's no reason. So it's just making sure that you set those expectations. And then the next step is make sure you have that conversation more than once because it might sound good today. They might forget what that conversation was like a month from now or years from now. And being in the car business from as long as I have, I'm like, I want to be crystal clear back in my car days of like full transparency and everything. So that translates exactly to real estate. You need to make sure that your sellers truly get what's happening. So there's not I didn't know this was happening. Now your deal's blowing up.
Yep. And it becomes a we thing. That's the big part of it is now we're in a relationship long term, buyer and seller. And you got to be careful, particularly for due on sale. One of the things we want to remind people of is seller is borrower and you are now the asset manager. Neither one of those is false. They're both 100% true. And so we train people through the process. Hey, remember, you're now the asset manager. Yes, you or your company owns the property, but you also manage it. And anytime you have to communicate with the bank, which is ideally minimal, you're the asset manager. You manage the property manager, asset manager, all that stuff. And the borrower is still the borrower. We never say seller.
Yep.
Yes, I love that. And if you're taking notes, that's a writer downer.
Well, because the success is in the small details.
That's exactly where it happens. And so we mentioned before the call that some banks are getting more aggressive and AI is coming into play. And so due on sale is an active concern. I've had people asking for due on sale insurance. I'm like, technically, that's not even a thing. And I legally can't even offer it to insure against that happening. But I do fix due on sale. And so I did start an LLC specifically for fixing due on sale. And we've successfully done that more than 24 times now.
So just for all of our listeners, maybe they don't even know what a due on sale clause is, right?
Rewind.
We got different levels of people
Yeah.
here. Some are like, oh
Rewind.
yeah, I know about that. Some don't. So what happens is if you have a mortgage, it's called a due on sale clause or an acceleration clause, where if you change the deed, you sell that property to somebody else, the bank could call the money due and say, hey, we noticed the deed transferred to Joe and Jen or whomever, and we want all of the money, and we want it within the next XYZ time frame. And that's a real thing that can happen, especially if you're not having the deal set up properly, you're not paying the payments on time. That's a huge red flag. Not making the full payment, not having the insurance set up the right way, even how you're taking deed to the property is all of the right steps. So that's why, once again, when I have an investor reach out and like, hey, Joe, I saw your YouTube video or some Pace Morby video, and I'm buying this property with a wrap or subject to, and how do I do this one thing? I'm like, you need to get some like real formal training on this, because this one question is going to turn into a series of questions.
It's like one mouse, right? Like there's always more.
Oh, there's going to be a lot
You're
more.
looking through a keyhole and saying, what about this one thing? And it's like, yeah, open the door. And there's a whole bunch of stuff you need to be worried. And so that's why I started Creative Transaction Consulting, Creative TC. It's exactly that, is because people know enough to be dangerous, and we're there to help them catch all the other parts and pieces, because we've been there, we've done that with thousands of transactions at this point.
Yeah. And so what are some of the, obviously you're coming in, you're working with investors who are doing these deals. What is your business process like? Like, what do you do? I mean, obviously you're helping them through the whole transaction, the closing. What does that look like on your end? And what does that look like on the investor's end?
So there's multiple parties, and that's what we have to break down. As part of getting a file onboarded is who's involved, who's the borrower, who's the seller, because they're not always the same entity, right? Because this could be a downstream wrap where somebody already bought it. Hey, did we ever define? Yeah, you defined due on sale. Okay.
The acceleration clause, the bank will call you and say, we want our money if you mess this up.
But that's a good thing too, because if you're a lender and somebody transfers to somebody you don't know, you would like the right, not the obligation, but the right to be able to accelerate that loan if you need to. So I understand why it's in there. I'm not against the due on sale clause, just to be clear. So when we take a file on, though, we want to understand who's involved. And we have fired clients before because they don't prove to us that they intend to be ethical with their process. And so there's been times when something comes up, and we help the client first is, hey, this is what we discovered. You need to address it. And if you don't, we will, and we don't need your business. And so it's gone to that a couple of times. So we want to understand who's involved. What are the short and long-term plans? Have you really discussed with the seller/borrower, what are you doing when you move out? Are you moving to an apartment? Because a lot of times it's a distressed seller who doesn't have cash in the bank, and so they're not going to be able to get a new loan and buy a new property. So it's like, if you're not planning on buying something for 6 to 12 months, thumbs up, let's rock and roll. We'll help you when you go for your next loan. We'll help you prove to your new lender that we're the ones making the payments, not you, so that you can go get that loan in the future, because that's one of those concerns that people looking through the keyhole never even thought about. Have you had that conversation with your seller? What are they actually doing? So we want to understand what the short and long-term plans are for both the seller and the investor, because if the investor is or the wholesaler is putting a property under contract with a 5-year balloon, and they intend to get it to somebody who wants to sell to an owner-occupant, guess what? You can't put a balloon payment on an owner-occupant loan if you're doing a wrap exit. And I'm talking with high-level terminology. And if you're lost in the muck there, it's because there's a crap ton of stuff to understand, and I understand it. So that's why I'm here, is because nobody explained this stuff to me. I went to understand it, to learn it so that I could understand it for myself and help other people do it safe, legal, and ethical.
Ugh, and that's why, we have daily support calls for like these kind of situations that come up, because I could not just throw everything into a portal and say, go watch all these videos and then, like high five, like, we'll see you on the other side. Like, that's just not how we could learn. And then it's definitely not how I could teach other people. So that's why I just love how involved you are. And you're definitely going to be coming into our small group coaching and doing some speaking. I can't wait to have you on there.
I love it.
Well, because there's a lot of complexities and a lot of moving parts to these deals. So you really need to understand.
Cascading dependencies. If this is true, then you got to check these other 5 things. And so, yes, we've got task lists. But when I do hiring, we hire people who are outcome oriented, not task oriented. And it's like, listen, you need to understand the goals of the parties, the short, long-term goals. You need to understand the dynamics and the rules and the laws of the states and the deal types and the options available to people, their general disposition. Are they flighty? Are they good to be long-term committed? All these little signals, you need to read all that stuff on an ongoing basis and make sure that your task list reflects the outcome that's going to happen. So I'll give you a task list, but that's the starting point, and you need to modify that along the way. That's how we have to manage these transactions. And so it's not very scalable. If I could go back and not start this business, I probably would skip and go to straight on to starting a title company, because the level of involvement we have, like one transaction requires this much knowledge, a traditional deal, this much knowledge, creative deal, this much knowledge, but I have to train my team on this much knowledge to be able to do this on this deal, this on this deal, this on this deal, like the total stack of knowledge we have to have. God bless the people that work for me. They have to
Yeah.
learn.
Well, I feel you, and that's how, as coaches, like in the mud with all of our clients, it's literally you don't know until you unpack and unfold, and then things do go off the title, and then you find another layer
Yeah.
out, and oh,
Yeah.
by the way, I do want to go buy a house in the next 6 months.
Well, and that happens. That's why what you said, it rings true. Like you have to have the conversation with your sellers. Like, what is your future plans? Like, once I buy this property, what are you going? Have you bought another house? Are you going to be renting? How long is that going to be? Because if they say I'm going to buy a house in 3 months, like you need to make sure that you're acting accordingly, because you could really mess up their chances of buying their next house. And then if that
Yeah.
happens, they're going to be mad at you. Stuff's going to start popping off. The next thing I want to make sure that we're all crystal clear on is, and you said this earlier, is this is a long-term relationship with these sellers. So you got to make sure that it's a good fit for them and you. I don't ever want to do business with somebody who doesn't want to do business with us. I certainly don't ever want to do business with somebody who's just like has crazy, crazy things going on in their life. And that could be different levels of tolerance, but sometimes they're just great people that had something bad happen over an incident. And some people just, I don't like a magnet for crazy, right? So
Yeah, it's like, I know you're down on your luck, but you've been down on your luck for 7 years straight.
yeah,
It might not be luck, and I'm not going to attach myself to that. I'm sorry.
yeah.
Mhm.
I can't bring you onto my team. I can't take your deal. I can't, whatever that is.
Yeah, we had a deal. We had a deal where in the beginning it was like, oh my gosh, helped him out. He was so thankful. We're the best ever. And then he was living with his mom. He's our age. And then mom's calling the cops on him. Right. And now all of a sudden things are going, and he's like, I want my house back. Right. And things are like going
It's not,
crazy.
not how that works.
So once again, you
Mm.
got to make sure that you're having these conversations, you're crystal clear. And once again, you're doing business with people who want to do business with you.
Well, because success is a good night's sleep. And yes, this business can be a little stressful at times, but if you can do every day, go at it and know that I gave it 110% and everything I'm doing is right. I know that I can sleep well at night because I'm doing it all by the books and I'm truly helping people out. I think that that's where this investors can get a bad rap and get a bad name, because there are people that cut corners and they're trying to do the easy way out. I don't even know what they're trying to do sometimes. They just aren't trained properly. But, at the end of the day, I love it. Because really, truly, this can make everybody win. If you could get a deal, I think of Nunda Boulevard. We talk about the deal all the time. It's probably our favorite. And we helped an investor out who was running an Airbnb and didn't want to keep that going. It was just too much. So he had 6,000 of equity. He didn't need any of it. We didn't have payments on it or anything. We take over his payment. We put in lease option tenant buyers. They rent it out for a few years, and then they bought the home. They're homeowners. We're all high-fiving, and we all walk away happy. And I want every deal to go that way.
I don't know if I was happy because the seller had a 2.7 interest rate that we ended up paying off when we sold the
The
property.
only sad thing was the rate.
But
Yeah,
that was the only thing that was the unhappy part. Everything else is beautiful. We made really great money. We helped another person turn into a homeowner. The sellers were thrilled, surprised they got their 60,000 so soon, because they gave us to the rest of the term, which is
Yep.
27 years
Mhm.
of no payments, no interest on their equity. So
Can I say something about that too?
yeah,
If you're a wholesaler, you don't have to walk away from equity / assignment fee value. If you have a good deal and the cash to close is too high, finance some of your assignment fee. Attach it as a third position lien or whatever and get paid either over time or whenever they pay off the next loan. You don't have to walk away from a great assignment. You can negotiate a huge discount and then the cash to close is still too high because of arrears and who knows what else. So just take 5,000 now and put the 25 or 30,000 on as a second position lien or third position. It's
Yeah,
fine.
absolutely. Because the cost of entry is what kills a lot of deals.
Yeah.
It's yep. And what I see most times, cash to close on creative deals nationwide, low end for the end buyer, low end 30,000, high end 65 to 70.
Woo!
Most of them are in the $45,000 range cash to close.
So when you're in our program and I'm telling you how we typically buy with no money down, guys, and we're getting these deals for like a fraction of that, this is why. If you got to be able to get your cost of entry low, you got to be able to cash flow to get a return on your investment too, and then obviously make the deal work. So I know earlier we were talking about trusts,
I was hoping
trusts
you were gonna go
and
there.
things like that. Right. And so I know this is a conversation that I was looking forward to having because there's a lot of misconceptions about trusts, how they can work, the benefits of a trust and why they're good to have.
There's even different names, right? Like not everyone calls it a land trust.
Well, there's only 6 land trust states, so it's not a land trust in the other 40, whatever,
44.
44. Yeah. I'm good at math on live calls, as you can tell.
I wasn't even counting though. So yeah,
Yeah,
what do we do with trusts? Like obviously we're fans. If you listen to our podcast, we love using a trust.
I
But
like them.
I want to hear your thoughts and when they might not work or why they might not work or what your thoughts are there.
So I come from IT and cybersecurity, and you know what a firewall is?
Yep.
Mhm.
It's like your network gateway. Okay, I had business owners talking to me as a consultant saying, what's the best firewall? What should I buy? The honest answer is a $200 firewall that's well configured is better than a $200,000 firewall that's poorly configured. So whatever your technician can support is the best option. So what's the best way to buy a subject to property? The best way you understand how to manage it. So if it goes into your own personal name and you can manage that, cool. If it goes into an LLC and you can manage and understand that, cool. If you understand a trust well enough to manage it correctly, great, love it. Like that's the problem with trust though, is you can do pretty much anything. And if you have to take something to court, the entire trust agreement now comes up for adjudication and judgment and inspecting where the commas are, and everything is up for grabs as far as interpretation goes. Whereas if you bought it on a wraparound mortgage and there's a problem, there's already a well-defined default process and procedure established federally or with every state. And so it's a tried and true process that you can fall back on. But when people try to play games and tricks with trusts, yeah, you can get real clever, but you could also get it wrong. And I have seen people, for those of you who understand how trusts work with a trustee and a beneficiary, I have seen people sell the trusteeship of a property
Mhm.
thinking that both the buyer and seller, all they did was sell the management of the asset, not the beneficial ownership. It's like, you should not be touching a trust. Do I love trusts? Yeah, I think they reduce the risk of due on sale. They cannot eliminate it for an investor buyer, but I think they significantly reduce the risk of due on sale. However, it's more dangerous if used incorrectly than just going and closing in an LLC or in your personal name.
So have you found that if some lenders are going to call the loan due, it's because it's in somebody's personal name or in a LLC versus a trust?
No, so I think it's just going under the radar. You really can't provide attribution and say, because this was in an LLC, if it was in a trust, it wouldn't have got called. You really can't say that. But we don't see trust called as often. However, I have seen properties get called in trusts, and one of them because it went into a trust. It's just any transfer triggers some lenders. And so fixing due on sale is a very dynamic thing where it's like, yeah, you could probably 40% of the time just do this one thing and that would solve most due on sales, but that doesn't take into account the plans and promises that were made from the beginning of the parties involved.
Right. So here's where the most fear comes in with investors is if I do one of these deals and the bank calls the loan due, am I stuck coming up with all the money?
I would say generally no. I have not failed yet. And to me, a failure would be that if you have to sell the property, refinance the property, or it gets foreclosed on. None of our clients have had to do that yet with a due on sale. And like I said, over 24 at this point. But yeah, you might have to. I can't say that that's not going to happen. You might have to sell it or refinance it. And if it means preserving the seller's credit, you had better sell that thing at walkaway money, right? Like whatever that break even dollar amount, if you can get it sold and protect the person's credit, that's your ethical duty to get it handled.
So
Agreed.
is there certain lenders that you've noticed that are more likely to do this, calling the loan due than others?
Rocket Mortgage and Home Loan Serve are the two most aggressive that I'm aware of.
Because I used to hear like Mr. Cooper was like the scary one
Yeah, didn't Mr. Cooper just get bought?
by Rocket
by
Mortgage?
Rocket.
Huh? Yeah.
Yeah.
So,
So
yeah.
yeah, you definitely got to make sure, like you said, you're doing the right. I notice a lot of times too where the issues come and there's many different things that could trigger it, but a lot of times they're not making the payments on time.
Yeah, just stupid stuff at that point. It's like, don't be the lowest hanging fruit that's my primary principle when it comes to cybersecurity too, because I was a cybersecurity consultant. Listen, you're never going to be secure. It's not a destination. Just don't be the lowest hanging fruit. So get the basics in order and be fine, and you're fine. We had a 5-pack get called. One lender, 5 properties in the same state, the same sub-2 buyer, because they're same contact now. I'm guessing, but they cross-referenced their database and saw the same phone number and mailing address on 5 properties. And they're like, oh, let me check all these. And all 5 got called within a month and a half. We fixed them all. But so one of those tips and tricks is use a different phone number if you can, use a different mailing address, even if you're fudging like to 123.5 Main Street. Do something so that it's unique technically in their CRM system when they look at the records.
Right. So it's once again, it's all these small details. That's why I say if you're starting this off, my favorite deal, creative to do, is a straight seller financing, free and clear property. 40% of the houses around the country are owned free and clear. That means 4 out of every 10, they don't owe a mortgage on them. So if you're going to do a creative deal, those are my favorite. There's no lender involved between you. Just the seller is the lender now. You've turned that seller into a bank. Those are the easiest creative deals to do. So those are my favorite. You can negotiate still crazy low rates, payments, as far as so many different factors. So those are my favorite. However, when you're going to get into one where there's a mortgage involved, there are more steps to it. It gets a little bit more complex. So that's why we're making sure that we're having these talks, because these are the deals where if there's something that could go wrong, these are the typically ones that can. So you need to be well aware of how to do it the proper way, so you don't put yourself in a crosshair of some lender who can be calling you and say, hey, wait a minute, I noticed that you bought this house and we need all this money, right?
And then don't be afraid to ask for help, right? Like you're going to have to pay for a service like you're talking about if you do need that assistance. And I feel like ego set aside, guys, like everybody's got to learn. We all are here to support, but at the same time, like we've all paid a lot of money to learn how to do things properly. And so we were not afraid to pay to learn. And I just want to always extend that too, because no one knows everything. Everybody who does know something has paid for that education and has gotten themselves to where they are.
One way or another, they've paid.
Exactly. And I'd rather pay a dollar amount than anything else.
So are there certain states that you do service and then maybe some other states that you don't service?
So because as a transaction consultant, I'm an influencer and not a controller, I've just pulled out of New York and New Jersey. The dual attorneys, they want to be the big shot in the room, and they don't like some dude in his basement in Kansas saying, hey, by the way, you should probably include this document. I'm like, I respect your license, but I know more than you in this domain because that's where I live my entire... It's this big in the real world of real estate, but guess what? My whole world is this.
Yeah. We do a lot of deals in New York, and I will tell you, when you're dealing with 2 different attorneys, it's a pain.
Yeah. It's not worth my fees. It's not worth the headaches. It's like, no, I've got dozens and dozens of deals a month all around the rest of the country. We just stepped out.
So if you're listening and you have deals in New York, send them to Joe and Jen.
Holla.
We'll take those off you.
Just because that's where we learned. We didn't know any better.
I'm happy. Yeah. And I'm happy to send them your way. I do not want them.
So this also goes for you. If you have any of your people that have deals in New York and they're thinking of assigning, we buy. And I will tell you, they have that saying, if you could do it in New York, you could do it anywhere.
Yeah.
That's where we learn.
You can make it there. You can make it anywhere, baby.
And that's where we learn. So when we started doing deals in other states, I'm like, wow, this is so much easier now.
Florida and a title company? I was like, wait, what?
Yeah, because
Alabama?
Yeah.
Really?
Well, that's why.
Unfortunately, the properties are like $17. So it's like, how much can you cash flow?
Upstate New York, they're inexpensive, but the market's still strong and things are still selling. So a lot of our portfolio where we have these deals are all over New York State. And that's like a hidden secret right now. Everybody thinks Florida is sexy, but once you put in taxes and insurance and
Have
HOA,
you paid insurance in Florida? My goodness.
we do.
Or we won't. That deal just flushed out.
Yeah. We've got one right now. Hopefully we'll be closing in a few weeks to months, depending on when she can find her next house.
Yeah, she's looking.
But insurance on a small little house here is like, we got a discount for $3,500. I'm like, wow, that's really cheap.
But we had to go get like the 5-point, there's always extra steps like you talked about. Like, so just knowing to go the extra mile and ask the right questions. For sure. Oh my gosh. Well, time is flying. I don't want to take too much more of your time, but anyone who wants to be able to follow you on socials, I know you do provide some great content out there. And then also, like, where can people connect with you? And I got to give you a shout out because I loved your virtual office. I was like bragging to all of our clients. I was like, this guy has this legit, like, I thought I was walking into a real, like, a doctor's office or something, but it's all virtual online. And like, there's people greeting you and then you get checked into a different room. And so I just love that whole experience. So where can people find you if they're looking for that kind of level?
Yeah. That number one is at creativetc.io. And that's most of my domains are going to be IO. And I've got multiple, but I'm not going to flood you guys with too much stuff. Creativetc.io. There's literally a button in the top right on desktop at least, you can join my live Zoom virtual office. I have 15 employees. 1 or 2 are on standby to have a conversation with anybody at any time. You can walk in and someone will say, "Hi, welcome to Creative TC. Do you have an appointment? Can I get somebody to chat with you?" So if you have a creative deal problem or issue, I am here for you. And that's why I created it. So creativetc.io, book a free call, do a walk-in meeting. Let's make sure your deal is safe, legal, and ethical. One of our core values is lead with value, which means that's a free consult. We want to make sure that your deal goes the right way and that nobody's getting hurt. So
Right.
that's the one way to find me.
Yay.
And let me tell you, for how inexpensive your services are, for the service level that you guys provide, it is a bargain to make sure that somebody's looking over your shoulder, especially in your first bunch of deals, right?
Mhm.
Maybe you've
Every
done
deal is a mentorship with my team.
right. So this is the point of having that, that level of expertise behind your back. Like Jen said earlier, success is a good night's sleep. And when you could do the deal, know it's done right, and you can sleep good and make good deals, guys, this takes all the worry away.
Yeah.
Now you just focus on deal making and let the people, the technicians, do what they do best, right? And so this is why I'm thankful that you came on today. I know our coaching community is excited to have you on our support calls. They're going to have the same kind of like a little bit smaller and some Q&A and things like that. But these are the services, guys. So this is out there. Make sure you take advantage of it. If you're looking to get into these creative deals, get some formal education on how to do it the right way. So you're not going to be sitting there late at night or wake up in the middle of the night in that cold sweat saying, I messed something up, right? Because that's not
Or
good.
get the letter in the mail, right? So, and if you do, it's okay. Caleb's here to walk you through.
I've got that, like the blood turning into electricity, like ice electricity in your veins. Like that's the feeling when you get that letter in the mail, and I recognize it.
Yeah.
Well,
Well-
thank you again. I really appreciate you taking the time and just going out there and serving people. We really appreciate it.
Thank you. It's an honor to be here, and I appreciate you guys significantly.
We'll see you guys soon.
See you guys.